Today, we're unleashing American energy and clearing the way for thousands and thousands of high-paying American energy jobs.
The White House loves black gold, but will its focus on American energy translate into profits for an industry that can suffer from some crude price swings?
This was a good day for the price of oil, 4 in a row. But as regular viewers already know, I believe crude will likely stay stuck, bouncing between the mid-40s and the mid-50s for the foreseeable future because there's so much cheap supply in this country, keeping a lid on prices. On the other hand, whatever you think of President Trump, there's no denying that this is one of the most pro-petroleum administrations in living memory. And I think that's bound to be good for the pipeline plays. Remember, the pipeline operators just transport oil and gas. They don't need high commodity prices. They just need high volumes. We got volume aplenty. However, it's not easy owning a pipeline master limited partnership in this environment. Take Magellan Midstream Partners, MMP. It's an oil and refined product pipeline operator with tremendous exposure to the red-hot Permian Basin down in Texas. I like Magellan so much we own it for my charitable trust. You can follow along by joining the ActionAlertsPlus.com club. Unfortunately, the stock's been languishing of late, down 9% from its February highs. Problem? Like many other pipeline names, Magellan sports a bountiful 4.7% yield, but that payout becomes a lot less attractive when investors believe interest rates will keep rising, making the bond market competition more attractive. And the whole pipeline complex also tends to sell off along with oil, even though Magellan is really much more of a toll road operator than a commodity play. Still, this company reported an impressive quarter a little less than 2 weeks ago. Magellan delivering a nice top and bottom line beat, and management reiterating its 8% distribution growth target for both this year and next year. Stock barely budged on the news, partly because oil was drifting lower at the time. So with crude climbing again, could the pipeline plays be getting their groove back? Let's check in with Mike Mears. He's the chairman, president, and CEO of Magellan Midstream Partners. Hear more about the latest quarter and what's next for business. Mr. Mears, welcome back to Mad Money. Good to see you, Mike. Thank you so much. Have a seat.
Glad to be here.
Okay, we're trying to explain to people the relations between an oil pipeline and an oil storage company and the price of oil. And all I can tell is that really the more oil we take out of the ground, the better it's going to be for you.
That's absolutely true. I mean, we're well positioned in many basins, but in the Permian in particular. We've got 2 pipelines out of the basin. We're looking at building another one. We have contracts on the pipelines we have in place, so it is more like a toll road. It doesn't vary with the fluctuation in price of oil. And we've got plenty of capacity on existing pipes, as I said, and we've got potential to add pipes to the Permian.
Well, let's talk about that, because I know that you have been talking about a potential for a huge $500 million worth of projects. What does that mean? Can you accelerate your growth rate, or does that just mean consistent distribution boosts?
It's really in the category of consistent. I mean, most of our projects are long lead time projects. Many of them need customer commitments, which take time to secure. Right. But once we have those, they're very solid projects. And we've got a number of those, not only on crude oil pipelines, but crude oil export facilities. And we've got a number of refined products opportunities also.
So when we hear that the U.S. government allowed us to export crude, that's also a win for you.
Absolutely. As light oil production grows in this country, it's going to overwhelm the capacity of U.S. refiners to consume light oil. And the oil coming out of the Permian in particular is getting lighter and lighter. That oil has to go to the export market. So it's given us opportunities to build infrastructure. We're building that in Houston, we're building that in Corpus Christi, and we're expanding that significantly.
Okay, so I know our investors who watch are always going to say, all right, well, I know it's like a toll road. How much of it is not a toll road? How much it actually has commodity exposure? Right now, what would you say about
Well, for our company, about 85% of our business is fee-based, more like a toll road. About 15% of that is commodity related, and that has to do with blending margins on gasoline and butane, which fluctuates somewhat. But that's not a money-losing proposition, really, in any circumstance. There's always money to be made there. It just fluctuates from year to year.
I would love it if you would just tell our viewers in English why you, the only reason why my charitable trust owns it is that you have a no-incentive distribution right strategy. This is the one that is best for shareholders. If you could just, in English, explain what that means and why it's so much better if you're a shareholder of Magellan than it is for a lot of others.
Absolutely. Many years ago, when MLPs were first formed, many of them had what were called incentive distribution rights, where the general partner, which has a small equity stake in the partnership, gets up to half of the cash flow over time. Right. And obviously, that's a drag on cash flow. So you're investing capital, half of that's going to somebody else, only half of it's going to the actual public market. we don't have that drag. 100% of our cash flow goes to our public unit holders.
Yeah, see, I just think that's such an advantage. I want people to understand that. Now, you've been doing a lot. You've got Saddlehorn from the Rocky Mountains. You've got the Galena Park. You've got a lot of different things going on right now. Which of these are the big, can be a kind of a fulcrum to take things higher?
We've really got 3 focus areas for growth. One of those is additional crude oil pipelines.
Right.
We're looking at expanding out of the Permian down to Corpus Christi.
Right.
The other area is crude oil exports. We're building a facility in the Houston area called Seabrook Logistics for crude oil exports, and we're looking to grow that in Corpus Christi. And the third is really refined products exports, which we don't talk about as much. But as we have so much abundance of cheap crude in this country, refiners are going to continue to run, and they're going to export that.
Who takes it? Who needs our stuff?
You know, the world market. It's at the world market, and so you've got needs in Asia, you've got needs in Latin America, you've got sometimes needs in Europe. It's really a world market, and it goes wherever the best netback is at any given moment.
Well, I've got to tell you that your consistency is remarkable, and I think that right now 4.7% yield is pretty darn good. And I'm going to continue to add the position for my Chapel Trust anytime I can. Thank you so much. That's Mike Mears, Chairman, President, and CEO of Magellan Midstream Partners. This is the most consistent one, and it also has that distribution method that I told you about. No incentive distribution rights means that you're in the driver's seat. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.